Hello everyone, welcome again. In this lecture we are going to start chapter on partnership of ACCA F6 taxation. I'll just quickly go through the notes and I will share the screen with you. It's just a small chapter, just a 1 page long basically. As you have already studied it, paper financial accounting of ACCA, which is a paper F3 of ACCA. So the partnership rules work in the same way, except for one small difference which we have already studied anyway, which is the basis period. So whenever you are doing the partnerships, so partnership simply means whenever different people start a business together with the intention of making profit, so they will decide earlier that how much the percentage will each person get, how much contribution will each have to make, right? But the problem arises for tax purposes whenever a partnership is running but the new partner joins in, and that is a problem in the partnership for taxation purposes. And likewise, whenever within the running partnership, if a partner leaves the partnership, that also creates some problems. So we have studied the basis period anyway. Now say for example a partnership is running and there are 3 partners in the partnership. Now each partner will have their own separate basis periods. Each partner will have their own separate accounts. So they will be getting the salaries, so they will be making their own accounts, they will be making their own basis periods, right? Now say for example the partnership was already running and there were 3 partners and another partner joined in, which was partner number 4. Right? Now for the 4th partner, the basis period for the first year of trade, the first basis period will apply for the 4th partner, because every partner will have to make the separate basis period. Now the 4th partner is just joining the partnership, so that's why the 4th partner will use the first basis period rules, which is from the start of the trade to the next 5th April. Likewise, if within a running partnership a partner leaves the partnership, then for them the closing rules will apply. Last year basis period will apply for him because he is leaving the partnership. So in short, that within the partnership every person is responsible to make their own accounts, every person is responsible to pay their own tax, and every person will be making their own basis periods as well. Because they are separate individuals. However, for partnership, they will be jointly and severally liable for partnership liabilities anyway. But I'm talking about the single partners, they will be making their own basis periods. Right? Now, as you can see on your screen, it is chapter number 12, page number 28, and it's on partnership. So it says, first step, partnership tax adjusted profits are apportioned among the partners according to their profit sharing arrangements. And there is in the notes it says profit sharing arrangement include the salaries of the partners and the profit sharing ratios as well. Right? In the step 2 it says that you will have to make separate basis periods, and there will be separate loss reliefs as well for them. Right? Now on the right side, if you see, I've given you an example. Say for example there are 3 partners in a partnership. Partner A, partner B and C. So you will have to make the separate basis period for all of them, as you can see. So first we will make the profit apportionment to all of them, and then we'll make the separate basis period for all of them. Right? So that's it for our partnership. Now we will do a question on that as well, so that we can understand this concept better as well. It's question number 87. We are just doing a small portion worth 3 marks only. So it's a question number 87 of PPP exam kit. It was examined in December 2015 attempt. Right? So there are 3 partners, Amanda, B and C. So basically A, B and C have been in the partnership, and the 4th partner is joining on 1st of May 2016. Right? So 4th partner is joining in on 1st of May 2016, and 4th partner name is Mr. D. Now in the requirement it says calculate D's trading income assessment for tax year 2016-17. Now whenever it's saying tax year assessment for tax year 16-17, it means the new partner is joining in, so we'll have to calculate how much tax he will have to pay during tax year 2016-17. And we know because he is joining in the partnership, so the first basis period will apply for Mr. D, and we only have to calculate for Mr. D anyway. So first basis period was from the start of the trade to the next 5th April. So for him, for Mr. D, the start of the trade will be the date he is joining the partnership, which is in this case 1st of May 2016. And for next April is going to be 5th of April 2017. Right? So this comes to how many months? May, June, July, August, September, October, November, December, January, February, March, April, March. So 9 to 11 months, right? So these are 11 months of profits which we will have to make. Now, and the profits are given as well. So year ended 31st of October 2015, 147,000 pounds. So Mr. D will not have any share in this one anyway. If we look at the second one, year ended 31st of October 2016, and the profits are 96,000 pounds. Now, in this period, Mr. D has got some share of profit. How? Because he has joined on 1st of May 2016. So from 1st of May 2016 to 31st of October 2016, let's see how many months. May, so it was May, he joined on 1st of May, yeah. So May, June, July, August, September, October. So 6 months. So we'll take 6 months of profit out of this. So 96,000 pounds, which is for a whole year. So we will divide that by 2 so that we can have the profit of the 6 months. Right? So if we divide 96 by 2, so we will have the profit for the 6 months period anyway. And then that profit of the 6 months will be divided by 4, because it says in the question that the profits have been shared equally always. So profits have always been shared equally. So we will divide that by 4. So the answer is going to be how much? So 96,000 pounds divided by 2. Let me do it on the iPad so that I'll just tell you the answer. You can do so on your calculator as well, please. So it is 96,000 pounds. So we'll have to take the profit of the 6 months because it is for whole year. So 96,000 pounds divided by 2, or you can do 96,000 pounds multiplied by 6/12, whichever way you prefer. So it comes to 48,000 pounds. Now this is the profit for which Mr. D is a partner, and he is an equal partner just like the other 3 partners. So this 48,000 pounds is for 4 partners, so we'll divide that by 4 so that we can take the share of Mr. D. It comes to 12,000 pounds, right? Now out of this 96,000 pounds, 12,000 pounds is the share of Mr. D for his period of ownership, for his period of partnership, which was 6 months. So 12,000 pounds this month, 12,000 pounds out of this one. Now let's look at the next one, which is 180,000 pounds. Now that 180,000 pounds is also for a whole year, so that is 180,000 pounds. That is for whole year as well. We will have to take the profits of the 3 years out of that, so multiplied by 3/12. That is going to be 45,000 pounds for 3 months. That will be divided by 4 again. It comes to 11,250 plus 12,000 pounds. 23,250 is going to be the profit, right? So that is the amount which is going to be the profit, 23,250. So 180,000 pounds, which is the profit, for the whole year. For 2016-17, we have to take the profits for the 3 months only, because 3 months are left in this year anyway. Or 180,000 pounds divided by 4, we can do so as well. So that is profit of 45,000 pounds, which is for the whole 4 partners, and that is divided by 4. That is the 45,000 pounds, the profit of the Mr. D, right, for whole year. We have to take for 3 months only, multiplied by 3/12. Again, it's going to be 11,250, and we will add the previous 12,000 pounds into it. The total profit is going to be 23,250, which is taxable in this year. Alright, so that is question number 87. Please make sure you redo this part and do the part B and part C as well of this question, and then check your answer from the back side of the exam kit. Right, so that's it for this video, and I will see you in the next video, and then we'll do last part of our income tax, which is on national insurance. Right, thank you very much and goodbye.